Average cash holdings in equity mutual funds topped 6% in February, a level last seen in May 2021. According to a Motilal Oswal report, the average cash holding of top 20 mutual funds was 6.2% in February, with 4 mutual funds holding cash in excess of 10%. The move, fund managers said, was due to the global quagmire that has hurt equity markets so far in 2023. While the Adani Hindenburg saga hit domestic equities early this year, the pain got accentuated when Silicon Valley Bank, First Republic Bank and Signature Bank in the US and Credit Suisse in Europe sought bailout packages. For now, the crisis appears largely contained, but the underlying issue, that of high interest rates, is likely to hurt equities a little longer.
Summarize the equity environment, I would probably say that we are likely to face recessionary conditions globally before rebound. In this context, we expect the first 3 to 6 months of this calendar year to see the economic impact of interest rate increases that we saw in the last 6 to 9 months. So, given that is the case, I would expect the first half of this year to be turbulent from an economic standpoint, and hence probably economies bottom out in the second half of this year. And that's when maybe markets preempt a little bit, so maybe we can kind of look to deploy in and around that point in time. I can tell you the symptoms for market bottoming out would be peaking out of interest rates globally, bottoming out of global growth, which will be as a follow-on from that, and finally inflation easing.
Analysts at ICICI Securities, meanwhile, opine that quantitative tightening, at least in the US, may be in its last leg with smaller rate hikes ahead. According to their recent note, the recent bank failures have increased the prospects of quantitative easing later in the year on the fear of economy falling into a recession. As equity markets discount such events well before they actually play out, we expect valuation contraction to slow down from here on for sectors with better growth prospects. Given this, Bhattacharya of Edelweiss AMC cherry-picks certain sectors.
And in that context, we actually find 5 themes where we think that the medium-term tailwinds are so strong that we can tide through, even through the recessionary conditions, in flying colors. And these 5 themes are basically rebounding credit growth, and the beneficiaries of the same, improving private sector investment demand in the form of capex cycle plays, global market share gainers, and finally, country-specific themes like indigenization of defense and PLI beneficiaries.
Overall market volatility coupled with robust collections through the Systemic Investment Plan or SIP have ensured higher cash levels with mutual funds. But fund managers expect markets to tread sideways or even decline further in the next few months, allowing them to buy stocks at a better valuation. Today, markets will react to the US GDP data released overnight on Thursday and will track GDP data for the UK and India's infrastructure output data due to be released today.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.